Recently, I got a question in the comments from Sean about how a stock split works and if you can make money from it. How would you know? Salada has a stock split in the making. Hi guys, welcome back. I'm Jamie. Now, if you're new to the channel and you're not subscribed yet, just go ahead and hit that subscribe button, alright? Turn on the post notification too, so that when we drop the video then you get the notifications. Normally I upload videos on investing, personal finance and just business in general in Jamaica. So you see, if you like them type of video here, you can also leave a thumbs up. You can also connect with me now on social media. I'm on Instagram at Radcliffe or Twitter at Radcliffe2030. Now, as I said, today we're going to go over stock splits. So what I'm going to do, I'm going to tell you what a stock split is, different types of stock split, and I'm also going to look at a few companies on the Jamaica Stock Exchange that did stock splits and how they're performing right now. Now, when you're thinking about a stock split, it can actually happen in two ways. You can have a reverse split or the regular stock split. The regular split is when you create more shares than what you have currently. So, for example, if you're doing a 5-to-1 stock split, what's going to happen is that your shares are now going to be 5 times more. So if you had 10 shares in the beginning, you're going to have 50 now. And one of the reasons why people like to do stock splits or why companies decide to do stock split is because investors sometimes prefer to buy cheaper stocks than more expensive stocks. And why this matters. When you do a stock split, what happens is that if you had one share costing about $100 and you split it, let's say 10-to-1 split, that one share is now going to be costing $10. Now, the market cap of the company doesn't fall because they have more shares in issue for the same price. So, 10 shares in issue at $10 is still $100 after the split. Now, if we look at the Jamaica Stock Exchange, because I want to put it in perspective for you in how the whole money thing works. Currently, NCB is trading for about $133, right? Now, if I wanted to buy a NCB share, I would need to take up $133 to buy one share. But for a share like Carreras, I only need $7. So to buy 100 Carreras shares, it will cost me $700. But if I wanted to spend the same money and buy NCB shares, I'm only going to be able to get 5. Well, 5 point something. But you get what I'm saying. Now, why this matters? If I have 100 Carreras shares and Carreras moves to $8, right? I just made $100 on my $700 investment. But if NCB moves to, let's say, $134, that's what? $5 I made on my share? Because each share moved by $1, so it's now $134. So I just made $5 in profit for a $1 move. Now, the next one is a reverse split. Now, reverse split works the opposite. If you have 10 shares in issue and you feel that, for example, the shares are not valued properly or you just have too much shares on the market, then you can say, all right, we're going to move it down like a 2-to-1 split or even a same 1-to-10 split. We're going to turn 10 shares into 1. Why a company would do this? There's a lot of reasons why a company would do this. Sometimes they might actually feel the company is just not valued properly or they want to boost the stock price. Now, in the US, I think it's on the Nasdaq, I'm not 100% sure. Companies normally perform reverse splits in an effort to meet listing requirements because you have to have a share value at least $1 to be listed on the exchange. So companies normally reverse split to boost the stock price, because just like with a regular stock split where if you value at $100 and you do a 10-to-1 split, then you come down to $10 per share. It's the same way where if your share is valued at $10 and you do a reverse split for same 10 shares, it comes up now to $100. Understand? Sometimes when a company does a stock split, it actually gets more investors interested in the company. Now, I told you guys that Salada is thinking about doing a stock split, and this is the exact reason why Salada thinks they want a stock split. Salada currently believes that their stock is very illiquid. Reason being, about 89% of the float or 89% of the shares in issue is currently locked up by the top few shareholders, with I think Research in Motion having about 72% of this float. So Salada wants to do a 10-to-1 stock split. And when I check the price on Salada, it's selling for like $43 something. So with a 10-to-1 stock split at the current price, Salada is looking to get about $4 per share or $4.30 per share after the whole split. Now, the other part of Sean's question is, can you make money off the split? Now, since Salada has pretty much started going through the rounds again off the split, I have noticed that their stock price has gone up. And when I say gone up, Salada traded for like $50.50 in February. Now, this stock has been trading for about $30 something on average. So investors are pretty much reacting favorably to the new news of the stock getting split. So yes, you can actually make money off a stock split, but just like how you can make money, you can also lose money on the other hand. So whether the increase in price will continue throughout the split, nobody can say. And why I brought this up is because a lot of you know careers, and a lot of you know that I am investing in careers because I like careers as a company. Now, about a year or two ago, Careers also did a 10-to-1 stock split. Careers was trading for over $100, and to increase the amount of investors in this stock, they decided to split it. Now, when Careers split, the share was selling for about $111, so they split to roughly $11.10. Now, when Careers split, I thought it was a very good opportunity to come in because you have a stock here that is running up to $111 and then split. More investors should now be coming in to start driving the price back up. But since the split, Careers pretty much has not regained its $11 price target. Currently they're trading for about $7. Now, I understand that the $7 right now is a pandemic price, to be honest. But before the pandemic, Career was trading for about $8 something with a high of $9 something. So it didn't go anywhere near to the $11.10 split price right after. So in this case, if you were in Careers and you bought the run-up and you made profit on the run-up, you would have started losing money after the whole split took place. So sometimes it might not be best to keep your stock after the whole split has gone down. Now, on the flip side, we can look at Pulse Investments. Pulse Investments, they are run a bull run, like a very good run, up to $10, and then they decided to split the stock. When Pulse split the stock, they got about $2.90 roughly after split. But unlike Careers, Pulse still had a lot of momentum behind it. The reason why I believe Pulse still had a lot of momentum is Pulse did the split on news. It was at the time that they had decided that they were going to do the development in Stony Hill. So they still had a lot of news and investors were still seeing value in owning the stock. Now, Pulse did this split in a pandemic. So early March, Pulse did their split. And over the year, over 2020, the price of Pulse has still gone up. So if you got in before the split and split down to $2.90, currently the stock is worth about $4.88 on the market as of yesterday. But it went as high as $5.50 just recently in February here. And just recently, the stock has been selling for over $5.28. So it's still making a lot of moves. So just to show you people, you can make money off a stock split and you can also lose money. In my opinion, if you're going to play a stock split, play the run-up. So when you play the run-up and you make money, take some off our table, sell some of the shares then. And then you can pretty much keep the rest, see how the split perform, because you might actually end up in the money like what happened with Pulse. Now you could have probably said, if you keep all light on the table, then you can make more money. But just like with Careers, if you keep all light on the table, you can lose money, right? So as I say people, stock split, making money is not a guarantee. Some companies can make money off the stock split, some companies might not. If they have a lot of momentum behind them, like what Pulse did with the news right before the stock split, then you should see a continued run because they're going to start getting more investors into the stock at a cheaper price. potentially driving it up. Thanks for watching, guys. And if you enjoyed the video, hit that like button. And don't forget to subscribe and turn on your post notification if you have not done that as yet. And a point to note, people, remember, Derryman just had their APO the other day. They also did a stock split a couple of years ago. And to be honest, they have not passed their highs from before the stock split when you adjust the price so far. So, not everybody wins out of a stock split. But you do have your runners like Pulse sometimes, alright? Now, as always, people, remember, I am not a financial advisor. So you see anything we hear here, it's just my opinions. Talk to your financial advisor first before you make any money decisions. Cool? So until next week, people. Bye-bye.